going on, traders? All right, I think I'm going to start up my trading platform. I'm going to probably have to mute that out. Gosh darn it. Yeah. So we opened up instance number 1. Let's open up instance number 2. Instance number 2 is now loaded. Just loading a bit of historical data here. So I haven't been looking at the markets ever since this morning here, so I'm just taking a moment to get back acquainted with what's been going on in the market. It seems as though bonds have rallied and really kind of whippy action in the 2-year treasuries that I was watching since the morning, actually. If you look at that 15-minute chart, it's definitely not clean at all. So I'm going to just take a minute to acknowledge the fact that I'm a little bit hyper right now, a little bit, maybe you can call it anxiety. So I'm just going to write that down really quickly. But I'm saying it out loud as well. And I believe it's due to the coffee I drank around lunchtime. And the solution will be to take deeper breaths and relax, basically. All right, so guys, if you just got here, what's going on? Hope you're doing fine. And we're gonna do a little afternoon stream here, and I don't really know what to expect or what's going to happen, but just saying hi, basically. I believe Biden was talking a little bit earlier, and it looks as though bonds have rallied. Let's take a look at what the stock market has done, and I'm going to switch you guys over to the chart screen really quickly here. So as you can see, we've seen a considerable rally in the bond market, pretty decent, mainly led by the 30-year. Well, I would say the 30-year is the strongest one at this moment. In order of strength, it's 30, then 10, then 5, then 2. Switch that over to 2. Yeah, you can see it as well there. The 2-year definitely still the weakest on the daily chart. Switch over to the stock market real quick here. We'll take a look at what's been going on. So we've been seeing a bit of a sell-off, it seems, ever since the highs have been hit this morning around 11 o'clock. Pretty interesting, actually. Now, it seems as though this is also mirrored in oil, because oil traded, I don't have the chart for oil, but let's see. It looks very similar, in fact. The chart for oil and the S&P 500 and the NASDAQ looks very, very similar at this very moment here. So I'm going to just clean up my chart real quick here by deleting a bunch of lines. I don't know where that came from. Okay. That's a bit of context from the prior day. So it seems as though we're testing prior day's price ranges here, which is pretty understandable. So I'll just mark something in really quickly here. So right around there, and you can see that it tested it, pretty much traded it to the tick. So that's the demand zone for the NASDAQ. Now, judging on how we traded it, depending on how we go forward from here, we'll have to take a look. We'll have to keep watching. Now, in regards to those 68s and everything, I don't think that's very much relevant anymore. But I'm not really a fan of zooming out too much anyways, so we'll look at the S&P 500 futures really quickly here. Hey, what's up, Vlad? Hope you're doing well, Captain. I would say right here for the S&P futures 580s. And this can be deleted as well as that. And I believe this can be deleted as well. Look at how we tested that. I love seeing things like that when I mark in a zone and then it gets like tested to the tick basically. Well, actually, I'll bring it back. That's the hotkey for undo in Sierra chart. It's Control Alt Z. It's a pretty good hotkey. Crude oil. Down to $65. Hello, hello. Hello, hello, traders. What's going on? So an interesting drop in crude here. Going to test price ranges of the prior day here. Not a whole ton of volume, gotta say. I look at crude because it's correlated to the broad market, well, to some degree there. It's correlated to Canadian stock market. It's correlated to the Canadian dollar. It's correlated to real estate trusts a little bit. So I keep an eye on it. That's the Discord server, yeah. I don't trade oil because I don't believe there's a good way of trading it right now for a small account trader. I'm gonna go ahead and fix some of my levels here and keep trading. Not trade too much this afternoon. I don't really have plans to trade, but if we sit back and find a decent opportunity, I might take it. So we're approaching the top of the hour here in about 10 minutes or so. Okay, let's see what you guys are writing here. Hello, Broke Boy. I hope you're well. Hello, CA. Any thoughts on DKNG? Would like to know your opinion. I can take a look at DKNG. Give me a second here. Let's see if I can bring it up onto this chart here. I don't know if I'll be able to give you a super big perspective on it, but I'll give you a shorter term perspective on it. How about that? So I'll load it into this chart right now, since I do in fact have equities data. We'll load a few days worth of data here for you. Ah, interesting. So quite a sell-off today. Ever since the pre-market, there's been quite a sell-off. So there's one zone right there and another zone right here, 33.57, and then you can even say another zone down here. As every single time it tries to rally, it fails. So there's a lot of resistance there. Currently at this very moment, it looks quite bearish. You can even go as far as writing it there. So look at the pattern here on the 15-minute chart. This is a great pattern. You see how every single time you see a green bar, the next bar trades through the high of that bar, and then it's followed by a dump right after that. So you see it. You've seen it right here. You saw that right here as well, right here as well, and right here as well. So the same pattern right there, trading through the high of the 15-minute bar followed by the dump, meaning that this stock, and I believe that, well, this happens in a lot of markets, but this is a common move. It will puke out the stops above the 15-minute high before going for the bigger move of the marketplace. So, you know, I mean, this is quite bearish. This is quite a bearish movement here. I can't really zoom out to give you any other context, so you would have to be able to tell me if this is into any daily chart demand zone. But I'll bring it up on the daily chart. Why not? Let's see. Oh, it didn't work. Hold on, I have to put it in here. the shortcut for changing tickers in CRO chart only works if you have loaded the symbol before. It doesn't work if you haven't loaded the symbol before. So look at that. Look at that disgusting daily chart. I mean, like, not only is it bearish on the 15-minute chart, it's absolutely bearish on the daily chart as well. So it's very bearish. Your stock is very bearish, sir. I am, you know, on this daily chart, I would say it has to get above 35 and 90. If it can get above that, you have a chance of a decent rally. But at this point, it's all bears, you know. You'd have to zoom in to find any kind of support, and on that 15-minute time frame, it doesn't look like you're finding it, as all the rallies are being sold. That doesn't mean there's still a chance. That doesn't mean there's not a chance for a short squeeze, right? Like if you start getting back above some of these areas here, you can kind of squeeze out these shorts back to about this high volume, you know, 32 and 75 and 33-ish, you know. But it looks to be pretty much correlated. In fact, it's leading to the downside if you really compare it to oil and the broad market here this afternoon, I mean. So we're seeing a bit of weakness in the broad market overall. All right, so that's what I have for you in terms of that, sir. I wouldn't trade it. Let's bring back CL. There we go. You can see how it looks similar to oil, isn't it? Similar chart. We'll bring up RTY on that daily chart. Oh, never mind. It's already on my top chart. I'll bring up NQ. F.US. No, never mind. S&P futures. Put S&P futures there. That's fine. Okay. Micro crude. Yeah, Captain. I wouldn't trade it personally. I mean, the tick, the commission to tick ratio is kind of high. The exchange fee is $50. 50 cents aside. Every time you trade it, you give 50 cents to the Chicago Mercantile Exchange with another 2 cents. And every cent crude moves in your favor, you make or lose $1. So basically, what that means is after the exchange fee, not even including your routing fee or your broker's commission, you're already down over a tick on the trade. That's not really my type of trading vehicle. Thanks, Raimondas. Appreciate that. VRM, yeah, I can take a look at it. Why not? Are we still on the right screen here? Yes, we are. VRM. I can't type it in. I always have the habit of typing them in, but it's because I've never loaded the symbol before. So we'll download some historical data. We'll bring it on the daily chart as well. Why not? Probably I should link these charts so that they switch the tickers at the same time. Probably that's a smart thing to do. So this one's actually recovered a little more compared to the other stocks you've been looking at. So I mean, on this 15-minute chart, this stock's actually currently bullish from 13 and 53. And if you compare it to yesterday's action, you can see that we traded into somewhat of a demand zone, traded through it, and now we're bullish off of this area. So, I mean, generally speaking, right now the bulls are in control. I wouldn't give too much precedence to this volume here. This is from yesterday. This is yesterday's volume. Also, the profile I have is aggregating to like every 5 ticks or 10 ticks, because I previously had this chart set to like NQ or something. So, whatever, not a big deal. Basically, it's bullish right now on this 15-minute chart. It has room, you know. Probably test out these highs. We'll see. It's traded 3 million shares, right? 3.5 million shares since the morning. It's pretty decent. You have other resistance right up there at 14.64, and potentially right about here at 14.20, 4.20. You see that? I see 420s almost every day in the market these days. Yeah, you think the audio is out of sync with the video? It might be. It might be, yeah. Let me try something actually. I'll try to do something kind of fancy. Watch this. Let's see. How is it now? It's probably better. Yeah, it's probably better now. I can even see it on the OBS. There you go. You guys are asking a lot of questions. I'm happy to answer all your questions. In fact, it keeps me out of trouble trading in slow afternoon markets. I mean, I'm looking at the treasuries right now, and there's really nothing going on here. There's barely no volume. It's quite a sizable bid there in the 10-year, though. Look at that. Look at that bid at 28.48 for 4,500 contracts, 4,000, almost like 3,000 at every price there. So liquidity in the 10-year has definitely gotten a lot thicker, which is always good to see. Hey, thanks. I'm happy I was able to fix that. At least I know the fix now. I had to unplug the camera thing. Okay, so CA wants to know how I identify my supply and demand zones. I have a video kind of that I show how I do it, sort of, but I'm just gonna lower that a little. So basically, I look at what's called one-time framing. And one-time framing is basically when you have, you know, the market closing in the same direction constantly. And I look for when that one-time framing ends. So in this case, we had, you know, bear right here. The bulls tried to test it, so I can consider this a battle zone right at 1380, actually, that I didn't mark in. So the bulls tried to test it right here and failed to, I guess, close above the high of this bar. So you can call this 1380 relatively a battle zone. And the first time where we finally saw the bulls close above the high of the next, after, you know, many red bars in a row, that's where I say that the one-time framing has ended. So I mark in a battle zone right there. So that's our support zone. And the treasuries are moving here because they're about to close. I'm looking at the volume trading on the treasuries here. Trading at 30s and 29 halves. Wow. Look at that. Look at that. Wow, if you were quick, you could have had that, man. That was like an easy scalp right there. That was like literally, I just saw free money on my screen. No joke. No joke, guys. I was looking at the 10-year and it just closed, I guess, because the bonds closed at 3 p.m. And it was trading 9.5 to 30, 9.5 to 30, 9.5 to 30 for a solid 10 seconds with consistent flow on both sides. So for me, that's free money because you just buy 9.5, sell 30, buy 9.5, sell 30, or sell 30, buy 9.5, just over and over again until like, and obviously you don't want to get caught. And then obviously it flushed down to 28.5 right after that. So when it was done, you didn't want to be sticking around that. You had to be in and out, and then out type of thing, you know. So that's quite interesting. It's always nice to see that. I'm gonna go back and, well, actually I don't have that reviewed or whatever, but yeah. Raymond just asks, so Sierra Charts, do you link your IB account to this platform or is it free? No, in fact, I'm using data coming from Sierra Charts. You could use data from Interactive Brokers and get it onto Sierra Charts, but I wouldn't recommend it. IB's data is pretty bad, and it's just, there's just problems associated with it. I wouldn't do it. I wouldn't use it. I've tried to use it. It just, you're better off using this data feed. It costs a little more, but it's worth it. And for me, it's fine. I just write it off and I just whatever. I use it for live streaming anyway, so it's fine. Achim Natsu, he's saying something about the book trader and TWS lagging. Just make sure that you have live market data since yesterday. In fact, it shouldn't be lagging. You should actually be seeing, if you have live data on your platform, you should be seeing your live quotes. There shouldn't be any lag. And in fact, Yahoo Finance is not a live data feed. It's not a real-time data feed. Or maybe it gives you like a snapshot quote or something like that, but I don't believe it gives you live data. So if you paid for live data, you should have it. Yeah. What do you use these supply and demand zones for? Well, look, I mean, it gives you a bit of context for the marketplace, you know? So it's a good question because, you know, a lot of traders, when they first start trading, they think that, you know, you draw a line on your chart and that when it gets to the line, you buy it, right? Or you sell it or whatever. It doesn't quite work like that. Sometimes it does, but generally speaking, no. You want to see confirmation. You want to see participation in the market. You want to see how traders are interacting around these areas, you know? That's what I look for anyways. Like, I try to take it one step further. I don't, you know, just, I have these lines as like a form of context. And like, I also mark them on my DOM as well. So that way I give myself like a good understanding of the market context in the market I'm trading and the markets that are correlated to it. And basically, I look at the order flow when the market approaches and is trading around these areas of context. Because remember, it's not always one price. So you can see in this case, I have marked in 1379, but really what it is, it's 1375 to about 1380 and something, you know. It's always sort of a zone to it. It's not really an exact price. So like, for example, here it's marked at 1353. Really what it is, it's like 13, you know, 50 under 1360. You could say about 1355-ish down to about, you know, 1345 even. You can even go as low as basically where that high volume node is, kind of. That's sort of where the demand zone is. There's certain scenarios where the volume profile can also give you like an indication of certain things as well. But yeah, it's just all market context. I use it as market context. Maybe I didn't answer your question as well as you would have liked it. You wanted to hear something like, when it gets to the line, you buy it, it's a guaranteed trade, it's guaranteed money, guaranteed free money. No, unfortunately, it doesn't work that way. Yeah. Oops. I know all my hotkeys. Okay. So it seems the stock market is selling off a little bit. We can take a look at what's going on here exactly and take a look at what the volatility looks like in the NASDAQ. It's kind of like a, let's see what that looks like. It's the same old shit. That's a little better, it's fine. So as the Nasdaq's kind of falling off a cliff here, we're not really falling off a cliff. We're trading kind of at these 84s quite a lot here. And the S&Ps are trading down at these 60, 68 and somethings. Captain, you're killing it, dude. Only guaranteed money is for combine fees to combine resets. Oh my god, dude, you're killing it. It's so true, dude. Quite whippy there in the ES. So I mean, we're trading into a demand zone on the NASDAQ. I would consider this a demand zone, all of this. And I just want to look at what's sort of correlated here. Give me a second, guys. Also, don't be offended if I don't answer all questions in the chat. For example, CA, you just asked a question. It's very general and it's It would take a long time to answer that question. I mean, look, I've been trading for around over 3 years. I've been looking at markets for quite a long time. So I could kind of go over my like trajectory of like everything I've learned, but like I'd rather not do that right now. I'd rather focus on what the market's doing, you know. But if the market suddenly slows down and there's nothing happening, I'll answer your question. How's that? Pretty brutal sell-off there. 68s now, guys. So now we're overshooting the demand zone actually. But we're basically into a bigger picture buy zone. That's something you have to be aware of, especially for the Nasdaq. The Nasdaq's into a bigger picture buy zone. In terms of the S&Ps, I can't see anything there. I can zoom out a little bit, like 10 days out or something, but I don't think that there is anything. No, in fact, there's nothing there. We're just flushing through this range and on very little volume, if I might add. You know, now trading at these 56s here, Nasdaq, more or less. It's looking like at about seven point ranges, more or less, so 56s. I'll kind of give you guys a bit of insight into my process here. So you can see how it's rotated about 7 points up from there. So about 56s, 6s, 5, 4, 3s, up to about 3s, with an overshoot. No higher, in my opinion, no higher than 67 and something. And there it should rotate back through 56s. There we go. So that tells me that the volatility is right around 7 points or so in the Nasdaq. Toy asks, this is not TWS, what broker is this? So the trading platform is called Sierra Charts, and the broker, well, your broker could be any broker that allows you to connect to a third-party platform. My broker happens to be Ironbeam, but TWS is related to Interactive Brokers. I do use TWS, just not for day trading. Not for precise scalping or anything. Retail trapping themselves in NQ, yeah. So where was it? It was 56s, wasn't it? Yes. 56s. You're looking at 49s. Down to about 45s at most. And then back up we go to 56s. That volume was just around 47 and a halves. And there it goes. I would say there's a decent amount of movement here. This is pretty nice. Pretty nice movement to trade. Let me just run a quick scan. I want to see if YM's correlated. Control Alt A. How come it's not working? Control Alt A. There it is. Okay, a lot popped up. Oh my gosh. Okay, so that tells me. So when I run a correlation scan and everything pops up, it basically tells me that the markets are highly correlated, and I just need to look at the broad market. So I put YM and RTY on the screen here, because when everything's correlated, I don't need to start putting stocks on my screen. So it seems we've started a bit of a relief, a little bit of relief. There's been a bit of relief, just a little bit. Now NQ is at 69, you dirty puppy. 70 to 69. This guy's like, bro, where's the candlesticks? I have some on the other screen. I keep them there just so I can know where. I don't want to sound mean or anything, but less fortunate traders keep their stop losses. That's what I was gonna say. You can see the size of the rotation is still roughly around that. So there's NQ just flushing through this. Okay, so this is pretty bearish. Qs are flushing through. Tesla down 3.3, Facebook down 3.3 as well. 333, baby. Knowledge is overrated. I like that. Especially when the market's doing this. Ain't no knowledge gonna save you from this shit. I mean, this is pretty bearish on almost all time frames here. I need to get the ES back on this chart. Hold on. What the fuck, man? EPH18. What the fuck are you bringing up on my screen, dude? There we go. EPZ21. That's what I wanted. S&P's 57.25 to 57. 2.25 points higher. You're looking at, or lower in this case, 57. $53.75, that's the area. You can see it's only traded 10 contracts there. It should rip through that. It's traded through that now. A bit of absorption actually. 500 contracts on the bid there. 53.75 going through it. I think it can continue. Might rip up a point here. And there it flushes down. There you go. S&Ps are bearish, guys. this rate, NASDAQ looks like it's going for the big even number. We could say 22. Look at 22 on NASDAQ. $15 is the area, down to about 11. 11 on the low end. Below that, it's going lower probably. Holding it, it can go higher. It's trading 10s. Oh, it looks like it's ready to go lower still. 10, 11, about a 5-point overshoot there. Yeah, it's going lower. Going for that big even number, guys. Look at that. Look at the way it's just inching its way down there. 5s. It can pop up and grab some buy stops now. 6s probably a little higher. I think I'll go up to about, let's see here. I'm filled. Look at this. Look at this. Look at this, look at this, look at this. I'll take that at 7s. That was a great trade. Even though I think it's going to even numbers. It was stopping at 6s. I got out right there. As soon as it stops going in your favor, you get out. Feeling my heart rate increase there a little bit, that's for sure. It's crazy. No matter, I've traded NASDAQ over 2 years, but my heart rate still increases when I go for those trades because I know how easy I can get stopped out. I call the NASDAQ the noodles. I heard Kevin Talk call them that. So ever since he said that, I call them noodles as well. The NASDAQ, the big fucking noodles. That's what they are because it's like thin as a noodle. The thing is, if it goes in your favor, you get one long noodle profit. Hopefully, you learn how to stop out and take small noodles of losses. There it goes, flushing through the even number. Let's see how much this thing goes. Only takes a couple whales to cause chaos. Yeah, you got Moby Dick and you got the other one. Akim, I see you're typing a lot. I don't know what zero charts is, unfortunately. Maybe you're mistaking it with Sierra charts. Because maybe there's a pronunciation thing there that you're not catching, which I understand totally. Sierra charts, yes, that's the platform that I'm using right now. Wow, look at this. So you had the big flush and now a little bit of a recovery here off of these lows. $980s, 7-point ranges. Oh, there's a flush. It's flushing. Bit of a bid there at 68 and something. No problem. No problem, Akim. Hey, Jifo. Actually, I removed that. Whatever you wrote about, the histogram of the bid asks. I removed that completely. It's funny you say put it back. I don't need that. Everybody has a different method. 60.68 on NASDAQ. There it goes back at 68. The rotation up now. And it rips through. The noodles, guys. The noodles are ripping through. Yeah, that's a fucking noodle if you ask me, if I've ever seen one. Look at that. I just watched this market rip from 68 to 80 something. Iceberged a little bit and now it's back at 68. That's a fucking noodle and a half, man. I'm happy I didn't trade that. I was thinking, okay, where's the pullback going to be? But then it just rips right through the entire range. It ripped through the range on one side, ripped through the range on the other side. No range is there, that's for sure. That means that the volatility is very high. Higher than I think. Which means I should chill out before placing a trade. We're coming close to the last 30 minutes of trading, and generally speaking, the last 30 minutes is not very good, but every now and then, you know, you might get a session where it's moving reasonably well, and you can see now the NASDAQ is moving a lot as it sells off here. Crude oil as well, trading close to $65 here. The NASDAQ is leading the sell-off here. Tesla down 4.3% now. Nvidia down 3.7%. So some tech stocks are getting hammered here. It's not too bad. If we let's look at small exchange very briefly here. We can actually see crypto is not very much hurt from this sell-off, which is quite interesting. Actually, I noticed this the other day as well. US dollar as well, slightly up on the session. I'm looking at small exchange US dollar futures right there. And yields are down because bonds are up. Okay. There's a massive rally for you, if I've ever seen one. Look at this thing. I just watched this thing go from 62 all the way to 80 yet again. Or 79, that is. So now, it was a pretty strong movement. Now 75s, how long is it going to stay there? It didn't stay there, that's the thing. It did not stay at 75s. It's basically looking for liquidity is what it's doing. Now we're here at 70. Nice one, Muddled. And there it goes for another rip up here, trading highs again, 85s, now 87s. Ripping through these highs. $83 was it? Or it just ripped through it? And it goes straight down again. Yeah, noodles, guys. This is all noodles. Top of the half hour is coming up here in 2 minutes and a half. Ripping highs again, 95s. Evens again. It ripped through the evens on the downside. Will it rip through the evens on the upside? That's a different question. Market likes even numbers. Look how it's trading up there. It just kind of magnetized its way there. Now it's kind of selling off again. A few handles lower. I guess it had to check and see if there was liquidity, and there it goes. It trades at another time, even number. Again, trading this environment is not very indicative of opportunities for my style of trading, because it's moving very fast and it's absorbing at many different prices, and it's just moving so quickly. So it's the best thing is just to wait it out and just chill, you know, wait till I see something I recognize. Because with the way NQ is moving now, it's absorbing at so many different prices, it's just, you can't quite see where it is, right? So now it's looking like it's starting to form a bit of a bell curve here. Let me see. If I give it the center of this range right around these, for example, 98s. So let me see 98s. 98s looks like a decent reference right now. And it flushes right through evens all the way to 82. So that tells me that 98s was not a good reference. so you see what I mean? It's just it's pure momentum based. Actually, it's not moving in any kind of orderly ranges like it was earlier. It's very momentum based. It's very whipsaw. So I mean, there's a high degree of risk trading this market right now, especially if you're running a relatively tight stop. That tells me if you get into a momentum trade, you definitely want the trade to be on side almost immediately, and you will manage that trade very quickly as well. All charts look the same here, looking at RTY and NQ, NES, all their charts look exactly the same here. Strong correlation all around the board. $75s even. 74.5 there in NASDAQ, let's see. And it flushes down again, 10 more handles. Yeah, I think I'll chill out. So let's see what you guys are saying here. Hey, cheers, Akim. I'm happy you found that. I'm happy I answered your question. ARDX treated me not too bad, has good psychological content. I like the way you wrote that. Okay, I'll write it down. ARDX stock. I'll check it out later on, actually. Well, I just want to see what the markets do into the close here. So we're into the last 30 minutes of trading. We've seen a bit of a strong rip up here now as it's going up here. This is some nice momentum. A bit of absorption there at 86s, now 90s, now 95s. 90s a little bit, 91, 92s. Kind of hard to manage, I would say. Let's say 91s, it rips down. 7 points, this would be like the pullback. 80s even, it flushes through it. Yeah. You can't manage a trade in that environment. I mean, look, it's just too volatile. It's overshooting the range a lot. So this is, yeah, basically it's momentum is what I mean. That's basically what I mean to say. When the market is overshooting my volatility ranges, normally it means that the momentum is high. And breakouts are working better than any kind of range or fading setups. So this is very momentum based. It goes one way, and when it stops, it goes the other way. That's what I call momentum, but... $67s. And flushes up. That's probably a decent fade right there. I saw it. Back to 67s. Okay, that's good. That indicates to me that it's moving. That's moving with ranges now. So 67s. Now what? Going down. 57s. What are your thoughts on bag holding? This guy's funny, bro. I don't do it. That's all about us. That's what I can tell you. I don't do it. I mean, best of luck to people who do. You know. Unless it's like an investment. In that case, it's a little bit different because I guess you have more time to determine if your trade is a good one. And there we go. It rips again. The noodles yet again rip up another 10 handles up to 80 something on about a plus 200 here. The Russell is a little bit stronger even. The noodles rip up again. I think I might start looking to trade the S&P here because the noodles are just way too thin. But we have to just wait for the right thing. So let's say 93 or 93.5 on the NASDAQ. Let's say 93.5. It traded down to 3.5. Okay, I'll pull that out. That's kind of what I was looking for. It was basically that first pullback. You see how it traded down as low as 3.5. Fours traded. Fours were the upper end of that range. Now, by the if it trades evens again, it's not going to hold. I'll bet you. It might, but I don't think it will. Look at the way it's chopping there. Fours. There we go. Flushes right through evens. Told you. I have a good read on NASDAQ most of the time. Simply because I've traded it a lot. Now where are we here? This thing is still moving a lot like a fucking big noodle. And I would say my reads are pretty good, but it's very volatile, so I'm also careful in that regard. I'm definitely not too aggressive in this type of environment. I wait for to see the right thing. So say 96s now here. Trading 96s. And it just flushed down 12 points. 15 points. 96s are out of the question. Now we're down here at 80 something and we're flushing down again. And we'll just go over to the land of the crickets really quickly. As you can see, nothing's moving in the bond market. We'll just take a look at the chart really quick. Yeah. Bonds are barely moving, and that's pretty crazy. We've seen quite a considerable rally here. A bit of what I would call, what John Grady would call a steamroller rally. Because that's what it did, pretty much. It was steamrolling its way up. Now where are we at here on NASDAQ? And it's ripping up another time. Yeah. So you said something smart, Captain. I like that. I like the way you wrote that. I just know when it's out of my control. Absolutely right. I believe as a trader, you really need to know your edge. You need to know your strategy on a deep level. And that basically you need to know like how to not trade, when to not trade. It's a skill that comes over time. You might hear me repeating myself. I always say the same things, but that's basically what it is. Like there's certain trading environments that are just not favorable for certain styles of trading. Like this one is just very momentum based at times, but it's very erratic. I will call it erratic because at times you get a good range and then all of a sudden it switches to momentum again. So you really have to be careful, and I prefer to wait for the right plays instead of trying to trade every little momentum. I'm more conservative like that. I know some traders who will look at me and say, hey Chris, you're missing all kinds of trades because this thing is just whipping. You can just catch the wave any which way it goes. But the thing is, if you're wrong, you also get stopped out for the same amount. And if I start, doing that, I'm going to have to start trading more, which I don't really like. So this is pretty strong here, the way it's moving here. It's like single printing, absorbing, single printing, absorbing. Now it flushes down. Trading through the single prints. Again, very erratic. You see how it's trading? It's going like 10, 15, 10, 20, 22. So you have very large ranges. Now 28. That was a tricky little move there. You guys saw that. That was one for the books. That was certainly one for the books right there. Now it should stay bid there. You see how it stayed bid at 32? If it cracks 28s again, it's going back down. Above 28s, it can go higher still, but it's going lower at 23. Eighteens. Now it can go up 28, center of that range. The bid is as low as 21 down to as low as about 17. That was the range right there. Yes, yes, AP, yes, that's correct. One button, yeah. 28s. Trade up to 34s. Back to 28s. That's fucking jokes. Nice one, Captain. This is a little bit dangerous. I wanted to see more trading up here. Okay, 46, that's pretty good. If we get a quick flush, I'll take it. I'm filled. Oh, it's gonna stop me out. Oh, I'm saved. Ha, look at that. I got a break even there. That was, wow. It puked my break even though. You saw that, didn't you? Anyways, it wasn't a good fill anyways because it overshot me by like 3-4 points. So I didn't get the stop out, but I got lucky there. So I consider that luck. So I'll take a scratch on a trade where I clearly got a bit lucky. My order placement was good though. It just wasn't. I mean, I guess I just forgot to account for the volatility there. As I might need to go back and look at that one, but it happened so fast. But it overshot me down to about 32 or something. So your 3-point overshoot there is, I guess, within reason of what it's been doing. So not too crazy, but still pretty. I prefer to be within, you know, 1 or 2 points. And again, it's very hard to manage that, especially when the market's moving this much. I am not using Jigsaw currently. I'm using Sierra Charts, Jonathan. Thank you for asking. I have used Jigsaw in the past, though. I used to use it for over a year. Okay, well, this market is looking more and more like a last 30 minutes type of market. So I think I might choose to stay away now. Unless I see something I really like. But from a probability standpoint, it currently looks as though the low is in, certainly here. Well, it may not be. I mean, they could easily just flush through again, but it certainly does look like a temporary low has been put in for all of our equity indices here. And we're seeing very wide price ranges, very volatile action here. As you saw right there, we saw a big flush down to the moving average on the 1-minute chart. Bounced off of it, holding around these 24s now here. Just traded 18s on that little flush, didn't we? So I think I think this might be close to being it for the session for me here. 23s. The question is, would I sell 30s here? I would think no. 23s, yes, look at the way it's traded. 30s, now 33s, and it flushes through it. There you go. So that, again, that tells me my intuition is good. You traders out there, you have to listen to your intuition. You know, I just said it out loud. Sometimes we say things out loud and we forget about them and you do the opposite. You have to listen to what you say, because when you make an acknowledgement about something, normally it's an intuition that you're not able to totally explain in that moment. And I said it right there. I was looking at the market trade at 23 or 24, and I'm saying, would I sell 30s here? And I saw the way it traded right up to like 27, then 29 and something, and I said no, I wouldn't sell 30s right here. And what happened? It flushed right through 30s all the way to 39 and something, and then it sold off. So yeah. Just, you need to give yourself ways to kind of, you need to trust yourself, is basically, you need to have confidence in yourself as a trader, especially if you've been doing this for any amount of time, a decent amount of time, that is. Why did you switch? Good question, sir. To be honest, if I want to be brutally honest, I could, because I'm the type, like, I can be very brutally honest, and I like, for me, I don't hold back. Like, look, dude, I used it for a year and a half. It's a great tool. It helped me In fact, yes, I think that's it. I'm done for trading anyway, so look, I'll just I'm done trading. Here, 1 second. Here's my trades. I made 4 ticks on the 5-year, and I made a point, or I made a few points on one trade on the micros Nasdaq here. That's my trading day, guys. Commissions included. Okay. Okay, yeah, you asked me about Jigsaw. Yeah, I'll just fucking say it straight up. Okay, the thing is full of glitches. It's full of fucking bugs. I'm sorry to say it. It's the type of software that when they fix one thing or when they add something new to the platform, 3 other things break. Ever since I've changed to Sierra chart, I have no problems in regards to trade executions. Every now and then, maybe you might have something. Like the other day, I had a volume stop that didn't trigger properly, but I believe that's due to CQG, which is also questionable in my opinion. But generally speaking, I have no trade issues when it comes to Sierra charts. It's spot on, you know. That being said, I know a lot of traders who use Jigsaw's DOM still, and they're very good. They're very effective. Very good. You know, they're great. They're fantastic. I used them for a year and a half. I'm not saying anything bad about them. Actually, I appreciate what they do. And actually, they came up with they were one of the first platforms to really come out with some of these functionalities that weren't actually readily available to retail traders prior. So they deserve that recognition. Like back a few years ago, when they were developing the volume stops and everything, and those things were available in CQG and whatever, but Jigsaw's DOM is just better than CQG's platform, in my opinion, that is. But a lot of traders will tell you the same thing. They like the DOM better. So yeah. Also, I have a question. Do you use indicators like volume profile to find areas of interest and order flow to confirm your trade setup? Margin call time, boy. You know it, boy. You know it. You know it. You know it. I do use volume profiles, yes. To a certain degree, that is. To a certain degree. They're helpful for seeing certain things. Like, look. Shows me, you know, where have we been trading. I can see, you know, where traders are piled up at times in the short term. I can see, you know, where we've been trading from a session standpoint. I think volume profiles are a very important tool. But at the end of the day, it's market context, you know. So it gives you areas to work with. It gives you context to work with. But when it comes to the execution, that's a little bit different, in my opinion. What do you think about AMC and GME? I do not know, sir. I haven't looked at those stocks, but I could. I could look at them, but I'm too lazy. No, there was one of the guy trading more stocks. He's like, "What are your thoughts on bag holding?" I was laughing when you wrote that. ARDX. Let's take a look at ARDX. He says, this guy, he says, by the way, guys, if you want more stocks to trade, if you want to look at stocks to trade, go follow this guy on YouTube, Trading More Stocks. This guy. He's got some pretty good content. ARDX. Okay, let's go look at ARDX then, huh? Let's look at what it did today, huh? Oh. know what you mean when it comes to psychological content now. Don't mind the volume profiles, guys. These are set for a 10 tick increment, and obviously to fix it for a penny stock, I just need to fix that and put it as a 1. And it's not going to fix my volume profile. I have to reset it there as well. Like if I reload and recalculate, you see it's still going to be there. I'd have to do this, and it's annoying to set this and reset this every time. But yeah, there we go. I just fixed it, right? So here's the stock that he pointed out. Very interesting kind of movement. Seems pretty manageable actually. So here's your here's your pre-market trading range. Sold off right off the open, sold off, traded through the pre-market trading range, and bounced right off of it and went straight for a steamroller, basically. Straight for a steamroller rally. And I'll zoom in on that 1 minute and I'll see the same sort of idea. There you go. So there's a steamroller rally for you. I just want to make sure we're on the right screen. Yeah, we are. Okay. So dump it, pump it, pull back, take out the break evens, puke your break even out, straight into a steamroller. Whoops. Little light pullback, kind of chopping trading range. Good opportunity to scalp trade around this. And then continues the rally. But again, look at these trading ranges. This is actually good activity. I like the way this is traded here because you can see it moves up, has a nice little trading range, comes back in, tests the range, the previous range, and then goes up, tests the high of the range, comes back in, tests the center of the range, and then goes for another steamroller. You know, so this is just great price action. I like the way this is done here. I guess over time you see different types of price action. Then you can give like different names to what things are. I would consider this movement right here is I like this type of action where you get like a trading range, pops one side, then goes and pops the other side, comes back in, because it gives you good scalp opportunities, you know. It kind of gives you a better idea at times of like where traders are getting stuck and getting trapped, and like whose money you're taking basically when you're placing a bet to put on a trade. So you get another steamroller, and obviously, you know, when the thing goes, it just doesn't stop. It's kind of like the bonds. When they go, they tend not to stop. Well, I'm not just going to say the bonds. A lot of markets do this. So it goes through the steamroller, finally pulls back, and then once it's done, it just goes the opposite way. Hindsight. And then it just pulled back ever since there. So that 1 minute chart, fine, whatever. The 15-minute chart, you can say now we've pretty much given back all the gains, and well, where it currently is here, $1.24. If it can get it back above $1.24, it has a chance to kind of retrace through this area. But the way it currently is trading here, again, look at how it traded through this area, and now it's failing to hold it. So there's a good chance at this point that a lot of these longs, especially the late longs, like the longs that bought it here, or the longs that bought it here, that bought it here, and that bought it here, hoping that it was going to be a pullback, and are now bag holding. It's a good chance that it's not going to go back there. And we'll probably explore some of the previous day's trading range down to about this, you know, $1.13. You know, that's pretty much, that looks like it's pretty much in the cards at this point. And basically as low as $1, you know, $1 psychological, 90 cents, puke out some stops, $1. At this point, traders, that's what they do. They buy it here and then they say, oh, okay, I'm going to stop out if it goes lower than $1. But, or maybe that's not what they do. Maybe they say, I'm going to buy it at $1. How would you guys trade this if you saw this chart? How would you trade it? Let me know. Oh, he's $1.36 entry on it. Okay, it's a little rough, dude. I mean, yeah, that's kind of what I can. That's what I just told you is what I'm able to see. There is a chance that it kind of holds around these sort of areas here, like I told you, around these like $1.13, $1 even, like. If I was a trader that bought it up here, you know, I'd be looking to either buy more at $1 or that would be my exit. But I don't know, so yeah. It's kind of ugly. So let's go ahead and set my the profile. Now, one thing that is handy in Sierra chart is that if you increase the volume at price multiplier At that point, it'll increase my volume by price automatically, so I won't have to go in and do that separately afterwards. So it's pretty handy. Take a look at crude oil really quickly. Traded as low as $65 here, basically the support of the prior day here. So interesting. This is all the support that the bulls have in this moment. There is a sort of a bigger area on the daily chart as well, down to about $64 and something that I was looking at yesterday. Keep an eye on crude oil, guys. Crude oil is important indicator for the market. By the way, I'm that kid in Discord who was spamming you with questions. No problem, dude. No problem. All right, well, the market's closed. I guess I can answer questions now and hang out. Are you trading full time? Well, I mean, yeah, I trade every day, so I guess you could call that full time. But you know, there's a discussion to be had around this that relates to your everyday sort of lifestyle and habits, and like the things you do around trading in your life. I think this is like a topic that gets neglected. And look at this crazy movement. It's fucking insane. Oops, I almost clicked on the sell column there on the RTY. Good thing that's risky. I don't want to be caught in a trade on the fucking RTY. I don't think my account has the margin to do that, but still. Anyways, there's the market closing on lows. You were right, Vlad. You were right about the margin calls. You were totally right about that, man. Great call. Great call. Great call. Great call. Intuition. That was your intuition right there. You typed it in the chat. That was your intuition just typing it. Here we go. Don't fight the margin calls. But yeah, that is... I mean, look at the volume. You could tell that's margin call stuff. Buy some. Now he's saying to buy it. Oh, goodness. Get some. Get some. Anyways. Oh, yeah, Edic. Edic, sorry I missed your question there. Which broker do you use? My broker for futures trading is Ironbeam. And my broker for stock trading, and I guess you would say investing, is Interactive Brokers, yeah. Those are the brokers that I use currently. Yeah. Well, look at some end of day quotes here. It seems that the NASDAQ has sold off quite considerably here. If we look at these daily charts as well, let me guys show you some charts. So the S&P is weaker, as well as the Russell is weaker. Kind of following crude oil as well. Crude oil selling off into the close like that. So this is consolidation for the daily chart on the S&P futures here. Now, arguably, strongly arguably, there is somewhat of a demand zone, well, potential previous supply zone, now potential demand zone on this daily chart around these 19.25. But as you can see, currently the market is just steamrolling its way through that, and it just flushed all the way down below 4,500. Maximum margin calls, basically. That's what I would consider this. And that's what I can say, guys. So I'm sorry if you experienced a margin call off of this movement, but you got to keep your risk managed. That's all I can tell you. If we go ahead and look at the Russell is the weakest. And structurally, we're in a demand zone prior, right? It's a prior demand zone. But it's also what you would call a demand zone that has been previously considered a demand zone previously. So it was a demand zone here, it was a demand zone here, here. So that's like 3 times. Then it was also a demand zone here, it was also a demand zone here. And this right here, 2160 on the Russell, was also a demand zone here. So I would argue at this point that this is no longer a demand zone because of the amount of times that it has traded. However, if we take into account that the velocity approaching this area, that indicates that it might still be a demand zone. So I'll leave that up to you guys to figure out. I don't position play bigger picture Russell, S&P, or NASDAQ. That's not my way of trading. But for the guys that do, hats off to you. Look at some end of day quotes here. Let's take a look at what the bonds did into the 4 p.m. close. Another leg higher, that is. Quite low volume on this rally, but you can call that a bit of a steamroller rally. So look at the 30-year. That's the area of context that we have. So we're actually trading into resistance on the 30-year bonds here. On the daily chart, you can call it resistance. I call it a supply zone, a contextual supply zone. And we're right up to it right now, 162 and 25, 30 seconds. Let's go ahead and switch over to the 2 years now, 2-year treasuries. Not really much to be had there, I gotta say. I was watching the 2-year this morning, and there's certain times where it can tip you off to movement in the bonds, but I don't like it too much. I just found it was the flow is kind of weird on it. The flow is better on the 5s and the 10s today. I took 4 ticks out of the 5s on a pretty easy trade, I gotta say. I took 2 scratches on the 5s and a 4-tick win on the 5 years. The 4-tick win, like I said, it was a very easy trade, in the sense that it was in my favor immediately. Well, I got filled very fast on it. That's always good. And when I get filled fast on an order, I'm always cautious because I want to see what happens upon me getting filled, right? So if the trade's in my favor, if I'm in the money and I got a very fast fill, that tells me that I got a very good trade. I have a very good trade right now, and I'm not going to be in a rush to get out of it. I believe getting out of a trade like that is a mistake. Getting out too fast of a trade that is clearly in your favor as soon as you get into it, right? So you want to let them ride if you can, you know, but also don't be greedy either. So I knew that there was an opportunity for movement there. So, and I knew that we were trading into kind of like an extension of a range. So I had my profit target. I had a limit order in that area, and I wanted to see as the market came into that area how it would trade, and that was going to determine for me if I was going to have to move that order up or down, or basically cut the trade or let it ride longer. So big discretionary aspect there in regards to trade management, and that's something I always try to stay on top of when I'm trading, because at the end of the day I'm a manual trader, so I'm focused on the discretionary process of how I look for how I qualify my entries, how I pull my orders out when I need to, and how I manage my trades when I'm in them. What factors do I use to determine if I need to be getting out or into the trade right now, you know? So it all worked out, and I got filled on the 4-tick profit on that trade, and it turned out it was fine because that was that movement. It popped 4 or 5 ticks, and then it immediately crashed back in and then went the other way. So it was kind of like a stop run play, and the setup was there. So that was a good trade, I would say. And one thing I was doing today, again, I don't even know who's watching this. Probably nobody, but let's see. Oh, there's people watching. Hey, what's up, guys? Cheers. One thing I did today that I like, that I actually got from this book right here, which is The Mental Game of Trading by Jared Tendler. I suggest this book, highly suggest it, especially if you've been trading for quite a while and you're kind of subject to a lot of the emotions and like your emotions like running wild while you're trading and all that stuff, and like thoughts, and you have like a million ideas like back and forth in your head. I would definitely encourage you to read this book, because it's starting to help me. It's helping me a little bit. So I'm the type of guy that I have a lot of ideas bouncing around my head nonstop. I come from a background of music, so well, when I was 16, I was writing musical compositions. I was like composing like 5-part harmonies and stuff. So like I have a tendency to be very, I'm very whatever. I mean, I think about a lot of stuff. I have ideas bouncing around a lot, and the same is in regards to trading, right? So when I'm passionate about something, when I'm into something, I always have ideas bouncing left and right. Why don't I do this? Why can't I do that? Can I do this? Can I do that? And I'm like tweaking, I'm thinking, I'm fine tuning ideas and all this stuff. So you reach a point that if you don't know how to take a break and how to like pause and write down your ideas, you go crazy. I go crazy basically. And so what I've been practicing is simply writing it down on a piece of paper. So I have this little notebook right here, and I just write it down. Whenever I'm feeling an emotion, whenever I'm feeling something, or whenever I have an idea about something or something that I have to do that's on my mind, I will write it down. And the goal of doing that is simply to get it outside of me so that way I can see it from another light. You know what I mean? So try that exercise out and let me know if it helps anybody out there. It certainly helped me to kind of clear up things, and I think it's common sense, right? It's totally common sense, but it helped me. So I'm gonna try to keep up that habit. Okay, check out today's video posting this evening. It was a great entry. ARDX 136 at 9:43 a.m. execution, mentality in question. Sure, man. Cure. Awesome. Is this like a long-term play? Are you like holding this long-term or something? It's like a swing trade? So there's a steamroller on the bonds, guys. Coming close to resistance. This is a 10-year treasury. It's coming close to resistance there. Okay, I see it now. That was the afternoon range of yesterday before that sell-off. One thing I noticed yesterday that was kind of a crazy thing was, you see this sell-off right here. This was as soon as Powell started to talk on the mic yesterday. We went for the steamroller kind of move. I keep saying that move. I'm obsessed with that fucking word. So we had this move up. Okay, it's a move up. That's what it's called. And then, as soon as Powell got on the mic and started talking about whatever he was talking about, tapering, it started to crash the bonds and the stock market as well. But bonds really went for a dump. All right, so we saw the 10, mainly led by the 10s and 5s and 2s, I believe. A real big dump. And I didn't trade it, but I think I got a piece of it on recording, if I'm not mistaken. I did get it on recording. So I'm going to watch that one more time. I watched it yesterday, but I'd like to watch it again, because that kind of action in the bonds is a little bit rare. When you see crazy kind of movement in the bonds like that, it's interesting to watch. You know, I want to study it. That's it. Okay. This is the 5-year now. I guess that is pretty relevant, especially since we flushed right through it at that point. So I would say this is still a relevant area to be watching. And then you have resistance up there. So the 5 years are into resistance up here at 1275s, more or less. And here's our support down here. It was kind of interesting action if you were watching earlier today, if you were looking at how it was trading here, as well as what the 2-year was doing when it was trading around this sort of trading range. It was right around, on the 2-year, it was right around here. Sorry, these are the 30s. Let me switch that. There we go. This is the 2-year treasury. So we had this big overnight trading range here. and I was watching it almost all morning, the way it would top tick the resistance, then start selling off slowly, and then it would bottom tick the support and then start bidding on above it slowly. It was really, really interesting action. And this is where I believe that having context on your side is very helpful, especially for what happened today. Like, I was watching how the bonds were trading this morning, and if you didn't have that context on your side, like if you didn't clearly see that there's a 15-minute demand zone here to be watching, you could have easily got trapped into something. I almost did at one point. I was lucky enough to pull a couple of orders out before I got triggered on them. So yeah, unfortunately I didn't record my session today. I think that was an accident on my part. Yeah, basically the way the 2-year treasury was trading around this 6.5 here, and it's what you would call a bad low, where you see it traded here once again, then it flushed through it by 2 ticks, and then it went to the other side of the profile, came back in, chopped another few times, and then it finally started to do the steamroller rally up. And you can see even on the way up here, this is just not clean movement. Well, on the 15-minute chart, it doesn't look clean because you see these upper wicks here, but don't let that fool you. This is like one of the hardest things I would say in all of trading, where you have a sort of a trading range like this, and traders are excited to trade like a breakout of the range, right? And there is always going to be a less fortunate trader, I believe, that is going to enter the market on a low tick, and you're going to be basically you're basically going to get bottom ticked, and it's going to go all the way to the other side after you get bottom ticked. And that's why this type of condition is very dangerous. So that's why you need certain things on your side. You need the context on your side. You need the order flow on your side. You need the correlations on your side. So like I would say there was multiple factors in this instant right here when the 2 years were trading down here, which I didn't trade, by the way. I was just watching them. I was trading more of the 5. I was watching the 5s and the 10s next to the 2s. And like Vlad is saying right here, there you go. When there's volume and volatility, very important. The flow when it was trading down here was very light. There was like an overall lack of interest in trading here, and most of the volume anyways was coming in on the 5 and 10-year treasuries. So to gauge an entry on the 2-year sometimes could be very tricky if the volume is less. And I don't even know who I'm speaking to here. I'm kind of talking to myself. I'm trying to fine-tune some ideas that I have. Basically what I'm trying to say is that it's important to watch them as they move together, because sometimes one can tip you off to what the other is going to do, you know? So if you're looking for a sell breakout down in one of them, and the others are indicating that they're on an uptick, then that's not good. So maybe some food for thought for a few traders out there. And what I just said, I guess it applies to stocks and everything as well. So just take your time with it. Trading is risk activity. That's the way I see it. Only 13 people watching. That's great. It tells me that I'm not super popular, which is a good thing. All right, guys. Well, leave any last questions you have in the chat. If you got questions, leave them in there. If not, I'm out of here. I'll give you guys like 2-3 minutes to drop whatever you got in the chat, and then I'm out of here. I got to work on a few songs for a gig tonight, and I'm gonna just go refill my water. I'll give you a chance to write something. If not, then we're gonna be out of here. margin callers out there. Just kidding. Volume profile a lot. I use it enough. So I would say I use it a little bit. Yeah, I use it. I use shorter term volume profiles. Like I look at the volume in the last, about 30 to 40 seconds mostly. So that is a form of volume profile. So yes, I do look at bigger picture volume, but not too much. Let's see if like you see that, like you can see this little bell, like this bell curve, that bell curve. For me, these are relevant. These are relatively relevant because they're relatively short term. So I'll use this in tandem with what I also use to measure the volatility. And that kind of tips me off to sometimes where I should be looking to place trades, at what areas, inflection points that I'll look to either trade a breakout or trade a fade back into the range. You see what I mean? If you guys want to talk about Fender Stratocasters, we can do that too. Basically, I love this guitar. This guitar right here is just unbelievable. I've played guitar since I was 10 years old, 11 years old. I'm 27 now, and I played a lot of guitars in those years. But this one, it's a 1989 Stratocaster, and it's just, man, it's just amazing. It's just great. It's just, everything about it is great. Now I understand why all the greatest guitarists played Stratocasters, because it's just the best instrument you can play. I made a joke the other time, and I was saying Sierra Chart is the Fender Stratocaster of trading platforms. I believe that to be true. But some traders will call me a total fucking nerd for saying that, but I believe it to be true. So that's it. All right, you guys. Well, I'm going to cut it for now. I'm going to go practice a few songs that I have to learn for a little gig tonight. And I will see you on the next stream, maybe towards the end of the week, maybe Friday. All right, guys.